Howdy there, folks. Welcome into today's video. We got a buy one, get one free here today. First video to react to here is talking about Tesla stock. A brand new video out 26 minutes ago from CNBC discussing Tesla stock on Fast Money. Now, first off, they're going to have an analyst on here, and also do keep in mind that relatively the Fast Money crew, most of those guys and gals are usually bearish on Tesla stock, and I've watched that show for many, many years. So it's interesting that, they kind of get to run their victory lap here, I guess you can say, okay? Second video I want to react to is buy these cheap and out of favor stocks this quarter, says PIMCO chief economist. And so we're going to listen to that, hear what stocks he's specifically talking about there, and I want to share my opinion on that video. Hope you guys enjoy this as always. Thank you for always joining me for these reactions. I don't know if we're at 21,000 subscribers yet, but gosh, we're getting pretty darn close. So I just want to thank everybody for joining me as always. Also, pinned comment down there will be to a free course I made free for New Year. So if you want access to that, go ahead and enter in your info and I'll go ahead and text it over to you. That will be pinned comment down there. Alrighty guys, let's get into this. If you have any opinion, share it down in the comment section.
Not sure I got it off, but I tried. Anyway, on the downside, there's a company called Tesla. They make cars, and that stock fell another 12% today. They did not sell as many cars as people had hoped them to, missed delivery numbers. The electric automaker just over 405,000 cars last quarter compared to expectations for more than 430,000. Stock having its biggest drop since September of 2020 and its lowest close since August of that year. For more on the road ahead for Tesla is Wall Street Journal tech reporter and CNBC contributor Tim Higgins. Tim, we could point to China. We could point to recession fears. We even point to what some may say is Elon Musk's reputational damage. Is there any way that there's one thing or rank the things that are the most wrong with Tesla right now?
Well, today is probably more about the expectation game. Remember, it was Elon last year talking about he thought sales could increase by 60% at one point. Then it was 50%. And then just a few months ago, it was going to be just under that 50%. And when it comes in at 40%, that's a number way lower than a lot of people were thinking.
And the biggest part of that, for anybody that didn't get to see those numbers, the biggest part was that quarterly number year over year was way under 40%. And that's, I think, the big thing that people are looking at. It's not just about the year versus year. A lot of people look at these quarterly numbers for Tesla versus the same point last year.
For this period.
There's also just a matter of competition, Tim, is there not? I mean, a few years ago, you could order a Rivian, or maybe there was like one GM Volt or Bolt or whatever they called it back then. Now everybody's got electric cars, and I'm reading Car and Driver, and I'm reading you, and I'm reading Dan O'Neill, and I'm reading Road and Track, and there's a lot of electric cars getting a lot of love for the critics that are not called Teslas.
Yeah, absolutely. And this year is going to be even more difficult as those tax breaks are going to be hitting in the U.S., being encouraging for people to look at an EV, to try an EV. And unfortunately for Tesla, they're not as robust for the Tesla offering as some were hoping for because of the pricing for those vehicles and the way that they were judged to be in the categories that they are. So investors are disappointed at those new numbers that we're seeing as they face that more competition. Now their vehicles might be too pricey for some.
We talked about China, the quote reopening. I hate that term, but China's a massive market for Tesla. Tim, if China quote reopens, are we going to see Tesla's fortunes turn around?
This has always frustrated me with Tesla stock. Listen to the way this gentleman's speaking, and he's not the only one that does this. I think most people that when they discuss Tesla stock, they talk about like, well, they didn't quite hit this number, or they did hit this number, or they beat that number, this or that, right? It never comes back to like valuation and looking at the forward PE, or looking at the trailing 12-month PE, or looking at the price to sales ratio, or thinking about future growth rates and those sorts of things. Like what's Tesla's long-term growth rate over the next 3 years, 5 years, 7 years? It's always caught up into these very short-term things, and it helps Tesla stock on the upside and in the hype cycles, but then it devastates the stock price on the downside, right? And it's frustrating as a long-term fundamental investor to hear so many people just, in my opinion, paying attention to the wrong stuff and just getting way too tied up into all these other short-term, metrics and things like that, and never bringing up like what's a fair price to pay for Tesla stock, because that matters in a significant way. Yeah, and just people miss it.
Not a stock perspective, maybe, but a car perspective?
A hot market in China is good for Tesla. Tesla can benefit greatly from that. It has benefited greatly in the past few years from China. There's enthusiasm for the brand over there. So yes, a reopening of China is positive for Tesla going forward. It also helps with its production. If they could get past some of these COVID concerns and help smooth out things, those are all up signs for Tesla and Elon.
Hey, Tim, part of the pain in the stock, I think, is a lack of trust in the company. And you look at those delivery numbers. I'm curious your thought on, and there's some speculation out there, that of the 411, only 300 of that were new orders. And the problem is we don't have the data, or we don't have the transparency in this company to even understand what is what.
Coming at the end of the month here, I think there'll be, when we can get some of the regulatory filings, I think.
From my understanding, as somebody that's owned the stock for many, many years, Tesla has some of the most rigorous standards when it comes to what is actually a delivery. So, like Tim throws a lot of stuff out there, man. And a lot of times it's like he's grasping for straws and just throwing stuff out there without even looking into the company. Like if you look at how they report a delivery, from my understanding, Tesla has among the most strict standards of any auto manufacturer for what is actually a delivery, right?
We'll be looking at that, but you're hitting kind of.
And Elon Musk has covered that in the past. He said that it has to be signed off, all the paperwork has to be correct, everything, and it's just disappointing.
Issues that we've seen with Tesla.
But Tim, he's been bearish on Tesla for 100 years now, so it doesn't come as a surprise.
Few months is just concern about the communication to the market. We've heard from investors unhappy with Elon as he's been distracted at Twitter, wondering what he's going to be doing with Tesla. How are they responding to this possible recession? And yeah, this is an issue with communication and trust in where the company is at this point, which is, I think, why you're seeing Tesla kind of signal they're going to do an investor day in early March, try to clear some things up.
Tim Higgins.
That's good. Do you know who's going to pay attention to Investor Day? Do you know who's going to pay attention to Investor Day? The people that are actually investing in Tesla stock. All these other folks that like to throw out these opinions of Tesla stock, and none of them are going to watch that. They don't care to be actually educated on this company. They care to read a headline number and be like, oh, and then just make up an opinion. It's very disappointing. It's always been like that in regards to Tesla stock. And these are supposed to be Wall Street folks. They're supposed to be the most sophisticated. And yet these are the same folks that bid Tesla up to a $1.2 trillion market cap. And those are the same folks that don't even want to pay $300 billion for this company now.
Journal. Thank you very much, Tim Seymour. Everybody, let's talk about this. I mean, what do you think is the biggest problem with the stock, Tim Seymour? Reputational issues.
First of all, I have to laugh that we're talking about car company issues. We're not talking about this tech company and this mumbo jumbo that was, I quote my friend Cy Jacobs, who said, being wrong, Tesla is so 2020. It's a mark-to-market issue. I mean, if you think about it, I was 3 years early and wrong, so I was very wrong. But my problem was this is a car company. We need to value it like a car company, and the competitive landscape, but also the accounting. They solved the balance sheet issue 3 years ago. I don't think they've solved profitability, and they certainly haven't solved the multiple.
They haven't solved the multiple? What are you talking about, Tim? It's a growth company. Have you seen the numbers? This was supposed to be super disappointing numbers, and did you see the growth rate? Value it like a growth company. And if you're valuing this like a growth company, it's nowhere even remotely close to valued properly. But Tim doesn't care. He literally doesn't care. He's so far gone to one side that you can't talk to him.
That's the biggest thing, valuation. People keep comparing it to this peak number where the stock traded, which was so absurd. It sort of, wasn't bound by any gravitational pull of finance. It didn't matter. They were going to just grow forever and be able to have tremendous margins, and competition would never matter. And that's so that it's here. It's still
competition.
Well, to that point, it's still a $340 billion market cap company, down 75% from those all-time highs late last year. And I would just say China is obviously the issue today. And here's the thing. We've talked about this on the desk for months and months now. China, we just spent a lot of time talking about China. They have less than 10% market share in EVs in China. There's lots of competitive, local competitors in China that might have a leg up. And if you want to go,
some are coming here, by the way.
And I'm going to hand the baton to Guy. If there's any geopolitical issues, the stuff with China is only heating up. And for some reason, Elon has been really quiet about all these conspiracies. He loves tweeting about conspiracies, lab leak, zero COVID, all this sort of stuff. He doesn't talk about those. Free speech. Doesn't talk about those because China is really important to them. It's not that big of a market. It's declining.
In terms of metrics, quickly, Tesla's still trading close to 2 times revenue. Understanding there's a technology aspect. Ford, for example.
No. Not just understanding there's a technology aspect. Understanding there's a long-term massive growth aspect. Guy Adami, come on, man.
At about 38% of their revenue. So something's got to give. Ford should be higher, but Tesla can still go a lot lower, in my opinion.
Can still go low.
Yes, sir.
69 price target right there.
$69. Oof.
Okay, so yeah, obviously those guys got to run their victory lap. This is their time, man. This is their time to run a victory lap over these next, few months here. Let them run their victory lap.
A certain longer-term buying opportunity. Let's combine the markets, the Fed, and just some school named Georgetown. Paul McCulley is PIMCO's former chief economist, now teaches at the aforementioned Georgetown's McDonough School of Business, and he joins us now on the fast line, no doubt champing at the bit to get in on this conversation there, Paul. Tim Seymour, I had terminal rate and the under. I've
Georgetown
lost that
alum,
bet.
by the way.
He's referencing terminal rate going up. How closely connected is the Federal Reserve money supply and the ability of stocks to go up? How connected are those things?
I think the connection is a whole lot closer to the policy rate than the money supply per se. I think the money supply slowing down and actually going down is reflecting a slowdown in overall demand for credit, particularly for leverage and so forth. So the big issue for me is the policy rate, and then two, how does the yield curve respond to it? So I think that we're almost finished the tightening process. It's either going to be a little bit below 5 or a little bit above 5. But I think we put in the highs for longer-term interest rates. The yield curve's inverted, and it's time to start thinking in terms of, yes, a pivot, not in the distant future, but probably by the middle of the year.
Oh, okay. Agreed. And I think the debate...
Hey, yeah, agreement with me.
Over rates going up is probably over or really darn close to it, Paul. So let's define pivot. By the way, maybe our Wordle starting word tomorrow for everybody out there. There's 2 pivots. There's the pivot to cutting rates with the Fed, and there's the pivot to just not raising them.
Which, let me be very clear about my opinion. I believe Wall Street's going to force the Fed into an actual cutting of rates this summer, believe it or not. I really do. I think they're going to force it. I think they're going to, there's a decent probability they'll tank the market. I think the economic numbers are going to be really bad. I think inflation's going to keep coming way down. And I think the Fed's going to have to say, oh gosh, man, we're really causing massive damage out there. And we're going to have to start actually cutting rates.
Lowering them and keeping the rate and the terminal rate and everything high for a lot longer.
I wouldn't say like quantitative easing or something like that, but in terms of like cutting and being like, oh, maybe we're a little too high now, inflation's coming way down, maybe.
Many people expect. Which one would you be looking for?
Well, you actually will have both. They've got to stop before that they can reverse and cut. So you got a pause, then a pivot, the 2 Ps, if you will. And I think they will actually be not that far apart. I think the pause will be the catalyst for renewed risk appetite, and then the pivot will be the turbocharger.
All right, so you heard our debate between equity markets and rates. I'll kind of go back to my first question, Paul. If the Fed stays where they are for a while, is tech toast for a while, for the same length of time?
I'm not sure, because the Fed can find a plateau and tell us that they're going to stay there for a while, but I don't think the yield curve necessarily will be singing in harmony. I think it will become even more inverted as the Fed finishes this tightening process. And I would suggest that growth stocks and the market more broadly is going to be keyed off of what's going on in particularly the 5, 7, and 10-year part of...
Now, if you're wondering, what does he mean by buy cheap and out of favor stocks? Like, what stocks is he specifically talking about? More than likely, what he's talking about here is buy growth stocks, buy tech stocks, maybe even a lot of the big techs. Those are very, very cheap, and they're obviously completely out of favor. He's likely not talking about Dow stocks. Those are extremely expensive, and those have been in favor en masse in 2022, and that's why the Dow held up so dang well, right? And a lot of those, even a lot of the commodity players, oil and gas stocks and things like that, those stocks aren't cheap and they've been in favor. So he's talking about by the opposite ones, likely growth, likely tech, and those beaten down dogs, those ones that you see down 60, 70, 80%.
And if that portion of the curve can maintain and itself and actually have lower rates, then you just have a higher inverted yield curve, but the equity market can get a grip.
Hey, Paul, it's Karen. Thanks for being on, and Happy New Year. Can you tell me what, in your thesis, what are you thinking inflation has to be at to allow the Fed to pause and pivot?
I don't think it's a level. I think it is manifestly going down, disinflating across a broad spectrum. And Chair Powell has already effectively told this in the sense that we've seen goods starting to disinflate, in some places deflate. We're seeing the housing market do the same. And the third bucket for Mr. Powell is services away from housing, and he looks at that being driven by the tight labor market and wages, and that's the last thing that has to cry uncle, and when it does, then the Fed's finished, and this nightmare of 22 will very much be in the rearview mirror.
Yeah, I mean, I agree with definitely quite a bit of what he's saying there, and absolutely buy the cheap stocks that are just. I mean, there's a lot of them. That's the thing in this market. There's a lot of opportunities in this market. There's no shortage of opportunities in this market over this next, I would say, 6 to 12 months, depending upon how long this market kind of goes lower and stays lower. I mean, just in big tech, Meta's still a sick deal. Obviously, you know how I feel about Tesla. That's a sick deal. Amazon's a great deal. I think Google's a really fair buy here. I mean, even when you look at some of the biggest big dog companies out there, those stocks are tremendous values at this point in time. I think AMD is really appetizing. I think it's going to be a tough year for all the semiconductor companies in terms of report numbers, but I think a company like AMD is a great buy in 2023 and just keep loading the boat on that baby. Adobe's pretty fair valuation. I mean, you just go through the list. Is so many opportunities in this market. Never mind in small cap land, that's a whole different story, right? So there's it's one of those rare years you get where it's just everything's there for you. And, whoever's able to take care of, take advantage of the most is going to win the most over the next 5-10 years, essentially. That's the way it always works out. Appreciate everybody joining me as always. Thanks for being subscribed. If you want that free course that I got for the new year, check out the pinned comment down there. Much love and have a great day.